And the end of that music and the end of all those legal words means it is ready for another episode of Trade Masters. Trade Masters brought to you by Tackle Trading, our midweek brainstorming session, if you will, where two coaches come, bring 5 ideas, no matter the market conditions, right? And like the bearish market conditions we've had off and on, and they're not even bearish, but the volatility. I mean, I've loved that sideways action here going on. I'm interested to see what the coaches have, but I love this, and we declare a winner at the end, but mostly it is so that we can come together as a community and 5 picks, get some ideas. And I've, in the 5-6 months we've been doing this now, I've gotten some good ones off our coaches. And we got a rematch. Tyler Craig, our defending champ. How are you doing tonight, Tyler?
I'm feeling champion-like. I got some good picks.
Well, you are, I think the last 2 times Greg has faced you, he has defeated you. So can he make it 3 in a row? Or are you going to finally?
It's a fluke. Don't worry, Mark. I got this in the bag. Don't worry.
Greg, how you doing tonight?
I'm doing all right. I'm listening to that stuff over there. I'm just going, God, it's going to hurt for him to go down a 3rd time in a row.
Listen, I love it. And whoever I, picking, you guys, I know you guys are professionals. You guys have been around trading 15 years. I know it's going to be some good picks, and I'm going to make some money, and that's what I like the most. So somebody will win, but we are all winners, as we say. But listen, enough of me babbling. Let us get to the picks. Tyler, as defending champ, who goes first?
I'll start. Okay. I think, Mark, you noticed today, little awakening going on in small caps.
My portfolio noticed. I know that.
Mine too. IWM up almost 2%. Got me interested in looking at some of these areas that we typically associate with small caps. Remember that these went gangbusters post-March or post-November with the vaccine. So a lot of kind of reopening plays in this space, in part because they got beaten down into being a small cap when they got destroyed last March. So I was looking at my watch list. I noticed some strength in airlines, casinos, retail ran today, and cruise lines. And so I was looking to see if I could get a good trade off of that theme. And I found what I think is a very interesting little pattern going on in Carnival. And I'm going to start on the weekly chart. CCL is the ticker. Take a look at the bigger picture here. And there's the March plunge. We've had a pretty good little recovery, and I like the performance of breakouts. We've had some decent runs when this thing pops above resistance. You could see one here, breakout, follow through. You can see one here, breakout, follow through. You can see one here, breakout, follow through. And here we are knocking on the door of another resistance zone after having gone sideways for almost, let's say 3 months, 3-month base here. And there's plenty of room to run up to like $40. So clean weekly chart, clean 3-month base. You take a look at the daily chart and you can see more detail here. And I was going to say, I don't know what the gap is here, but I think that's when we were missing the candle. Anyways, I like the run up into resistance. You got a couple of little pivots here that make it maybe slightly messy in deciding what your entry point is. But I like the breakout over the whole number, $30. So pattern-wise, breakout, bull breakout. From an options strategy perspective, the implied volatility is pretty low. These stocks have settled down. If you remember back last year, they were jumping around like a jackrabbit every day, very high volatility. They settled down a little bit. The implied volatility is lower. Because of that, I like doing a long call option or a call spread. And I was looking at just buying a 30-strike call and selling a 40-strike call, but going out 3, 4, 5 months to give this thing some time, because it's going to take time for this to get up to that $40 level, right? So I came to the trade tab, took a look at the options, and jumped right to October. So going to do a little more time than I usually do. And I got the 30 strike, buying that. You could just buy the call outright, but Going all the way out to 40, which is pretty far out of the money, I get to reduce the cost by about a third, and I think it's worth it. I think it's worth capping the gain up there to reduce the cost a third. So we'll sell that and paying $2.50 for a $10 spread. That means I can make $7.50. So risking 1 to make 3. And even if it doesn't get up towards 40, even if it gets to 35, you're still risking 1 to make 1, doubling your money. And I think it's good. So there you go.
All right. I mean, CCL, I mean, I've played it a lot on naked puts along the way. It's been it's treated me very well over the last year. The only question I have is the trigger. What is the price movement that you would look for? Because we don't want to do it at resistance, right? Especially since it's ran into it.
Mm-hmm.
What is the price movement you're looking for to say, boom, October 30, 40 bull call spread?
Yeah. Well, so the first thing I'll say is the reason why I always bring these up before they break out is because you want to spot them before they break out. I think it's very easy to spot something after it's run 5-10%, but you gotta be anticipatory when you're setting up these trades. So that's kind of why I bring it up at this stage. What am I looking for? So if I look at these prior highs here, I kind of look at what I think is most representative of resistance, what's been hit the most. And this high right here is essentially $30, right? Right here, $30. I'm ignoring this wick because it was an earnings announcement. So it could have just been an extreme move on the volatility with the earnings noise. So I'm going to say $30 here, Mark. Ignore the wick. If you want to be conservative, you can wait for a close above $30. If you want a quicker trigger, you just get in when the price breaches $30.
Got it. I mean, I still like on the Sunday night prep class that we do for pro members. I've liked reopening plays as a theme for a while. Love the cash flow, but you take several months off, provide some directional opportunity. Solid pick to start it off. All right, Greg.
I was looking at those reopening plays, same as Tyler, and there were some opportunities there. But you know what? I found some opportunities in some stalwarts too. So I went the other direction. I was looking at some big names there. The first one off the bat that I want to look at today is AXP. I've talked about this one before. We've had it on reports. It's just waiting. It's sitting there setting up just the way I like to have them set up. It's still waiting to break that 160 level there. I think it's fantastic. Much like Tyler, I don't really care about this little wick there at the high there above 160. I really, really like this trade. I think it's a fantastic trade. Obviously financials have been showing some strength. This came back, pulled back, gave us an opportunity, little W pattern here that it's setting up. So just your classic run of the mill, no BS kind of breakout here. So just a question of getting through that 160 level. Like I said, I like it as a trigger. Anything above 160, you could do 10% of an ATR above 160, whatever your poison is for entry. But I just like the 160 break here. I love round numbers. Those are things that I look for on a regular basis. Again, Tyler showed us a really nice setup there on Carnival Cruise. I see a very nice setup here on something that's a little more well-known, well, not well-known, but just a different type of stock there. So I kind of like these plays. For me, I was looking at the bull call for July. You look at the bull call, 160, 170 was going to be the target for me. And it's a really reasonable trade. So I think it's, what did I have there? 316 for $10. So again, much like Tyler's setup there, you're looking at close to 3 to 1. So definitely more than 2 to 1 anyway. So yeah, just a very simple, give it a little bit of time, break that 160 and work on it.
So what's our total cost here? About $3?
316 for $10. Yeah.
So we got about a $2.10, $2.20, $10 spread on Carnival, about a $3 spread on 10. Obviously, AXP is 5 times the price, right? Seems like a reasonable price. Trigger sounds good. And once again, AXP, even though AXP and Carnival have been, obviously entirely different companies, both have benefited strongly in that post-vaccine news return to normalcy play. Carnival needing people, AXP needing people to get out there and spending money. So just another way of playing the reopening play. Beautiful patterns on both. Beautiful patterns on both. That's definitely a sixes round, right? You know, this is sixes round. Let's see if you can be the tiebreaker, Greg, on a nice little joke.
All right, I'll start off easy on this one. Is Google male or female?
I have no idea.
Female, because it doesn't let you finish a sentence before making a suggestion.
And there will be 75 complaints to team@tackletrading.com. But yeah, seriously, pro members, or if you have questions about tackle trading, email me at team@tackletrading. I handle the customer service at Tackle Trading along with the other things I do. So if you have a complaint or if you just have a question about what tackle trading is all about, email me at team@tackletrading.com. All right, sixes round two, classic bull call spreads, different setups, one a little bit longer pattern, another in a better, stronger trend, forming a clear resistance. Let's see what round two brings. Tyler, what do you got?
All right, I'm going to go with metal and mining. Last week, I used FCX, naked puts. This week, I'm liking this pullback in United States Steel. Bit of a little bit of a more volatile ticker symbol, but I like how it's holding the 50-day moving average. I like today's bullish engulfing candle. Of course, I like the 4.5% move, and this also tends to do better when you're seeing strength in small caps. So you've got a nice little shelf over the last 6 bars, which gives us a pretty clean entry point. If you take a look at the intraday chart, little multi time frame analysis here, you're going to see, this is one thing we like as traders is clean entries. So I've got a nice obvious little base the last 6 days, as I said, easy trigger over 25. So if today was the real deal, if today was the beginning of a bigger bounce in this space, then we should see upside follow through. If it doesn't take out $25, then never mind. I'm not interested.
So basically, we have a week-long consolidation pattern of about $1.40 on U.S. Steel.
Mm-hmm.
It's pretty boring for U.S. Steel, right?
Yeah, I mean the irony is $1.40 is actually percentage-wise a decent sized move, but yeah. I mean it's showing that you're getting a compression in volatility, right? So there's this tug of war going on. And I don't really want to pull the trigger until it shows me that buyers have won that stalemate or broken the stalemate. So really from a multiple time frame perspective, I would say the weekly chart, the trend is up, got a little 3-week retracement. The daily chart shows you that retracement to the 50-day moving average, got a little base, and you can see the cleanliness of the base on the 30-minute chart. So I think from a charting perspective, you can carve out a pretty nice little, entry over the high, stop under the low, target back up to the prior pivot high. Just from a swing trading perspective, that's a pretty nice little bull retracement type of pattern on that daily chart. So the question then is, how do you want to play it? I think there's a million ways you could play this. I think you could buy the stock. In the options market, I don't even mind selling naked puts if you want to do a higher probability. For my trade idea specifically, I am going to go with here. Okay, personally, I'd probably just sell puts because that's my bag. But the options aren't that expensive on a relative basis. I mean, if you look at the IV rank, it's come down considerably over the last couple of weeks here. So I'm actually going to do a long call play with open gusto. I'm going to buy the AUG 24 strike call. So we're going to go out to August, take a look at the 24 strike. It's a 60 delta, so pretty, this is what we tend to suggest with a general swing trade long call option. Buying the first strike, getting the money out a couple of months to minimize the time decay. Looking to pay $3.35. And if you wanted to reduce the risk, you could do some kind of spread, sell something against it. But I think it's a decent way of doing an upside bet. Your ROI is going to be pretty good if it gets back up to 30.
We checked the 22 options for July on the put side. Just if I were to sell, I mean, that's the price level that interested me. I just don't know if I can get. I could get a nice little premium for it, actually.
Yeah,
that's actually a really nice premium. So
well, and that's arguably one of the nice things about the pattern is there's probably a lot for a lot of different traders to like with this, right? You can attract the cash flow traders saying, look, you get a decent ROI here. And the guy that's aggressive says, hey, you know, $3 ain't terrible given how much this thing moves for 3 months of time. So
there are definitely a few ways to play. I mean, that's what you get, like, especially when you get these tight compression patterns, you know, like, because, you know, up and down and up and down. And every once in a while, stock will just say, I'm taking a week off or 2 weeks off, form a nice compression pattern where the bulls and bears can battle it out. It's a pretty pattern, lots of ways to play it. Lots of ways to play it. You know, I like it. All right, Greg, round 2. What do you got for us?
I also found a retracement, but mine was a little different. ABBV, please. So if you can zoom in a little bit there for me, Ty. I love this little retracement here. The hammer candle today makes this look fantastic. Right into a known support resistance zone there. You know, just got below that 20 and then put in that hammer candle today. You know, uptrend overall, big strong move after earnings, which I like. Kind of crested a little bit. It's come back down. Obviously, we want the confirmation to go upwards. I just really like this 3-day, you know, actually technically a 4-day retracement with a, you know, green hammer candle. That's just one of the things I look for in the market. It's one of the things that has worked well in the past. So what I found with basically the majority of my picks today is that volatility has come down. The VIX, I think, was down to 18 today. It's come back down. So there really isn't a ton of premium in a lot of the picks that I have today. And so I found myself doing a lot of debit spreads, and this is no different. Again, out to July, I just like a nice, cheap little bull call, the 115, 120, you know, just very cheap, right? You're looking at, I think it's less than 100, less than $200 there. Right. So you've got a nice risk reward. You've got a cheap option play that people can get into, and just a really, really, really nice classic textbook retracement as far as I'm concerned.
All right. And so how would you play it as far as what call option, buy the stock, and where would you target? Is this a quicker play where you're playing up to resistance?
Yeah, so I think this thing, like it could stop there at 118, but I honestly think it's going to get to 120. That's why I kind of looked at the bull call 115, 120. Even if it stopped at 118, you'd still be in a good space for some profit there. And then that's really just back in that consolidation. Then if you do get that breakout beyond there, obviously you pick up a couple extra bucks. So for me, aggressively, you could trigger in, you know, once it got up past the high of today, tomorrow. Which is actually, I think, really close to where it closed. If you wanted to be a little bit more conservative, which that's fine too, you could wait to see what tomorrow's candle does. You might miss out. You might even wait till it gets above that 20 there to get into the trade. You know, just like I said, for me, trigger above where it is now, I would be okay with that. It's a little bit more aggressive just because that 20 MA is there, but I still think it's a nice cheap trade. Like you're putting out $180 essentially. You've got 2 months of time, a little better than 2 months of time, and you only got to move $5. And the ATR on this is, what's the ATR on this thing? You know, $1.87. So you've only got 2.5 ATRs to go to get you to your target there, and you've got 2 months to do it. So just like I said, for me, just a very simple, cheap bull call spread. Again, our IV rank is very low. You know, it's just an easy play. Target above, like I said, you can get in above the high, or you can wait for tomorrow's candle and go in with confirmation as well. Either one works.
All right. I mean, solid risk rewards in your favor. Just get that upward movement. Yeah, I like it. I want to like your joke.
All right, I'll try to do better than the last one. That last one kind of bombed a little bit. All right. You know, one thing I hate is double standards. You know, burn a body at a crematorium, you're being a respectful friend. Do it at home and you're destroying evidence.
I like that one. All right. You redeem yourself from the last one. All right, Tyler, round 3. You gave me Carnival and US Steel, 2 stocks that I've historically traded. Are you opening up my trading account to see what I got going on? Is that what I see here?
This one I'm gonna introduce you to something you probably don't trade as much.
All right. Let's see.
But hopefully you like it. So I track a lot of different asset classes, and recently I feel like there have been a few trading opportunities in bonds. TLT is the only really bond ETF worth doing anything with. The rest of them don't trade, or they don't. They're not volatile enough to do anything. But here's why I like TLT. I like this for a couple of reasons. First of all, this tracks bond prices, and bond prices move in the opposite direction of interest rates. So the theme that we've seen play out with the economy and with the stock market and with the price of money is inflation expectations have been rising, inflation readings have been rising, and so interest rates have been rising. As a result, bond prices have been falling. So we have a downtrend, we have a bear market in bond prices, we have a bull market in interest rates. If you think that's going to continue, if you think interest rates, the path of least resistance is higher, that means the path of least resistance for bonds is lower. So I have used rallies in TLT to enter bear trades, and we've got another one that's cropped up over the past week. And I think, we've come up to resistance here, Mark. We got a potential little mini reversal candle, bearish reversal candle. You could say, hey, isn't this more neutral in the short term? Certainly. The long-term trend is bearish, short-term trend is neutral. That tells me I don't want to do anything crazy bearish. But if I can sell a bear call spread, I'm interested. So when I was looking at the implied volatility, this still has an IV that's high enough relative to what it usually is to where I'm interested in selling premium. So I was looking at selling a bear call spread, and I could go to July, sell a 144, 149 bear call spread for was it 53 cents, I believe. So first of all, if you look at the chart before I build out the option there, look at the chart. I think this has got a pretty good chance of staying below 144, 145 for the next month, and I'm getting a decent return for taking that bet. So if I go to July, I can sell the 144 strike, which has about a 23 delta, sell that, buy a 149, get about 56 cents for a $5 spread. You could maybe push it a little bit further out of the money, but I think that's probably sufficient as a way of leaning neutral to bearish on bond prices and or neutral to bullish on long-term interest rates.
Now, a lot of members of our community are very familiar with trend trading, even buying off support. Selling and doing bearish plays at resistance, some individuals might not be as familiar with. Will you just walk through the logic of why that can be an opportunity, doing a bearish play at resistance, and how to manage it if it were to actually break out?
Sure. So if you look at TLT historically, and you could cherry pick the best time to do a bear trade, remember, we don't want the stock to go down. So it's like, well, where did the stock stop going up and start going down historically? Well, right here, right here, right here, right here. So if I could jump in a time machine, those were the optimal times to enter bear trades. And when I look, so for instance, Mark, the last time I traded this was right here off of this bear retracement. Didn't go down a ton, but didn't need to because I used a bear call. Well, I'm just looking at this recently, and I'm looking at these highs, and it seems like we got a pretty good pattern where there's resistance. There's sellers that are showing up in this 140 area. And if they show up again, this thing should drop, or at least not go any higher. And that provides an opportunity to make money with neutral to bear trade. So from a charting perspective, that's kind of why I'm putting some emphasis or some weight on right now being a potential entry point, because we are at that resistance level, which suggests it's going to be difficult to go much higher. And so, that's it from a charting perspective. Now, how would I manage it, or how would I trade it? Well, if I'm wrong, I have a couple of choices, right? I mean, if I want to get out at the first sign of things going, running amiss or going against me, I suppose, Mark, I could have a tight stop and say, look, if this gets above 141 and it transitions from downtrend now sideways to then uptrend, I guess I don't want to be bearish anymore. I could see somebody saying, hey, if it takes that resistance, I'm out of here. Though, if you're going to have that tight of a stop, I think you should probably sell closer to the money calls so you can get paid more, because you're going to bail quickly if you're wrong anyways. My plan is to give it room and not get out unless I hit 144. And so I'm essentially hoping that if it does misbehave a little bit and get above resistance, that it'll eventually turn lower before hitting 144. But I would stop out of this around 144.
Okay. No, I mean, it's an interesting setup, right? And, it's so often because I analyze things through bullseyes, and it's like, what do I like? What do I like? But I liked how you premised the bet. If you think that interest rates are on their way up, using rallies and then finding technical signals to play it, I think it's really decent, and it's very innovative, and I like something different. Right? I like something different. Gives me something to think about on Wednesday night.
Yeah,
Give me something to think about.
It's just like why we like putting trades on in gold and silver and precious metals, because it's a different asset class. It's a different asset class than stocks. And so you just get more diversification in the portfolio when you have different strategies and different asset classes at the same time.
And in a weird way, and it's one of those things that if you're right on the trade, might hedge your tech player too, you might have. So, but no 100% correlation on that one for sure. All right, Greg, we're halfway through.
All right. Can you pull up Clorox for me there, Tyler? This poor bugger is just getting destroyed, and our job as traders is to punish weakness and reward strength. And as far as I'm concerned, this is showing a lot of weakness. What I'm looking at here, you look at it on a weekly, it looks even worse. You look at it here, we've got an inverted cup and handle. You could make the case that you've got a head and shoulders there as well, but I'd say we got an inverted cup and handle. This thing's been getting beat down for the better part of basically forever. I like the break below 177 here. I've got a couple of bear picks this week. This is one of them. I just can't see anything on the horizon that's showing me any signs of life with this. There's nothing even, we just got the 20 crossing over the 50 shortly, a couple of weeks ago. It looks ugly. So there's no upside to it that I can see. And I think if it breaks where it is now, I think we're getting a run down to probably about the 165 level, if I had to guess for kind of a first target there. So just again, all of these things, when you start looking at the implied volatility, which I know my buddy Tyler does all the time, I do as well. The implied volatility on this thing is very, very low, right? Its IV rank is 0, right? Like it's just there's nothing there, right? So as much as I would love, and I'm a big,
and it's interesting because you don't see 0 rankings very often. When a stock has come down to support level in a multi-month downtrend.
Correct.
I mean that doesn't happen all the time.
No, usually you get a spike in implied
You get a spike,
volatility.
and so you have to pay more for your bearish trade. Color me intrigued.
That's right. So, like I said, I'm a big proponent of credit spreads. I'd love to be doing a bear call on this, but there's no money in it. So what's the point, right? So that brings us back to our bear puts. I want a debit spread on this one. So what I did was what I've been doing all night. There's a theme here. When you see low implied volatility, you got to do what's working, and what works is debit spreads. So I like the bear put out to July, 51 days out, the 175, 165. Again, a real cheap play here. You're looking $250. That's if you set it and forget it. $250 to play the downside to this. You've got you're going to get, what does that be, about $7.5 out of that for 250 risk. So you're looking in good shape there to 2.5 to 1. And again, I just can't see anything that's going to turn this thing around. It's getting beaten up so poorly, and it's not even a fear thing, right? It's not even a panic thing. It's just a down. And until it shows something different, I think you got
a pretty clear entry signal too.
Yeah.
I mean, you have a triple bottom-esque type pattern forming, 3 tests over time. Now, if this holds in a couple weeks, I'm going to be very interested, maybe the other way. But for now, I still can't get over this pattern and in the 0 IV rank.
Yeah.
I mean,
it's just ugly. Any way you slice it, as far as I'm concerned, this trade is just ugly. And that's, as far as I'm concerned, even if it's going to turn bullish, it's got to start doing a lot of work for me to get to look like that, because you've got so much overhead resistance. You've got moving averages in there. You've got resistance level. Like, it's really got to do a lot of work there. So that's why I'm happy if this thing gets below where it is now, the 177. You could even wait to get below that 176.46 as an entry. Once it gets below that, like I said, it's a short trip down, and there's really nothing to stop it as far as I'm concerned.
That round that round was a round of puncher jabs, and in boxing, Tyler came with his innovative way of play. You came up with an equally interesting, out of the box, and it's very classic downward pattern. But it's, listen, in a bull market to come with a nice bear pattern like that, Clorox hasn't been rallying in all this goodness, has it?
No, I guess not. Guess
so,
bleach and COVID are not friends, I guess. I don't know. So
listen, that was a power round. That was a power round. Let's see if your joke can break the tiebreaker. I've liked one, I've hated the other. What do you got?
Right. Okay. Anton, do you think I'm a bad mother? My name is Paul.
I like that one. All right, Tyler, we've got 2 rounds left. I've loved the picks so far. This is what I expect out of Trade Masters each and every week. Just good stuff. Lots of stuff to think about tonight. Give us another thing to dwell upon.
Yeah, let's we take a look at this in the halftime report, and I think I can build something around it. So I'm going to take a look at Dick's Sporting Goods. If you saw it on the halftime report, they killed it for their earnings announcement. They just destroyed expectations, and they rapidly raised guidance. It's always impressive when a stock goes from $55 to $85 in 2 quarters, and then no, we've destroyed it. You guys did not get the memo. We destroyed our earnings expectations. So the street's okay, we'll give you another almost 20% overnight. I think this is the type of gift that keeps on giving. I think this is the type of fundamental strength that provides a tailwind for the coming quarter. Dips are gifts, breakouts are buys, but I don't know if it's going to pull back. I don't know. Maybe we got to chase it. So I wouldn't mind getting into something now. And when I look at this, I say, is this the type of gap that I really think is going to fill? Or is this more likely to be a breakaway gap where it just bases and continues? I don't know about you, but me, based on the magnitude of the move, based on the amount of participation, and this thing was 5 times, even more than that, 5, 6, 7 times the average daily volume. People were piling into this. Long story short, I don't think this thing's going to go back down to $85. I'm willing to bet the gap doesn't fill, and if it does, that it then doesn't proceed to break the 50-day moving average. So I wanted to see if I could get enough premium selling this 85-80 bull put spread to make it worthwhile, and you can. So I'm going to go to the trade tab. I'm going to go to July. I'm going to sell the 85 strike, which has a 15 delta. So I have about an 80. This is ironic. Selling the 85 strike, I have an 85% probability of profit. So I'll sell the 85.80, get 52 cents, about a 10, 11% return for betting that this stock's not going to be below $85 in June, which I think is a pretty good bet.
Coach Emily has been all over Dick's Sporting Goods for 6, 7 months along the way. On the halftime report, she's brought this up a handful of times, always on setups. It's treated the community very well, right? Yeah. It's just, every once in a while, it's funny, you get in this groove, and sometimes the grooves can last years, where a stock produces setup after setup after setup after setup after setup. And it's why mess around with a good thing? Dick's has done very, very well. And, it's a lot. It's always just on the gaps, right? It's just do either of you have, let's just have a 30-second open conversation. Do either of you have specific gap rules that you apply? Because normally I try to wait 3 days before doing anything.
If I'm doing a directional trade, I would not chase this directionally unless it resets, right? So I would like to see a couple of days. Ideally, it pauses and then you get a breakout over $100, right? But if I am able to do an out of the money credit spread after it's pretty much said, hey, I ain't going lower, like I'm higher for the rest of the quarter, hopefully. I don't mind selling a credit spread bull put on the day of the gap. I do that a lot, actually.
What about you, Greg?
Yeah, I don't really. Yeah, I wait for the gaps to kind of work themselves out. Like for me, honestly, and I know this is counter trend trading, so you have to be very careful with this. I actually expect to see this pull back. Now, where it goes, I think Tyler makes a good point. Is it going to get below 90, which is where I would say the first support level is? Then obviously, you know, the next one that Tyler's got marked there, the 85. I don't think it's going to get below there. But with all this volume and this big gap, I honestly believe that it's got to take a breather. You know what I mean? Who else is coming in to buy this with 5 times the volume, right? And that's the thing. You need buyers to keep stepping up. Will they? Yeah, they could. But I still think it takes a breather. So when I look at gaps like that, I give it a few days as well, Mark, and just see how it plays out. Like I said, for me, I like the old miss the pop, wait for the drop kind of theory. So I'd love to see that thing pull back to support and then get involved that way. But as Tyler said as well, I would not chase this in any way, shape, or form. That move 20%, 16, 17%. That's a massive move even for something as strong as this thing.
Yeah, it's traded as well, so I'm anxious to see the coming setups. You know, and I always favor credit type plays, but that's just me. All right, Greg, got 2 picks left.
All
Give me
right,
one of them, round 4.
All right, I'm gonna give just a nice easy trade here. Can I get Brookfield Partners, please, there, Tyler? BEP. I got you there, buddy. All right. So this one here, this is just kind of your classic reversal here. Reversal expectations on this thing. It's not a massive mover by any stretch of the imagination, but it's at a sweet little level there where it's gotten above the 50. It's gotten above all the moving averages. We're not quite stacked in the way that I would like to see it, but I think we're right on that precipice of where it could be. It's a $41 stock. The entry point here would be above 41. I wouldn't get involved with it before that. But any break of 41, you're now breaking that upper trend line. Like I said, we just closed above the 50 today, which is showing some strength. Obviously, if we get above 41, you'd be above that current resistance level there as well. So just a nice, easy stock play here. You can run up. I think we'd probably get to around 44, 45 before you get that first slowdown there. ATR of $1.28. So I think you can get a $2 to 1 move here up to say 44, 45. So just a simple buy the stock, let it ride, you collect some cash out of it. That's just.
Yeah, will you just give me a weekly chart real quick, Tyler? So we got like no moving average, resistance, trend line. Yeah, you know, and I've come to appreciate the quick move down, quick move up, because it lets me know at least this, and you tell me what you guys think. You tell me if I'm an idiot or not. But like lately when we've had those quick move downs, because we've had a few of those over the last few months, and then not all of them get bought up, but some of them get bought up real quick. That's a nice little supporting downward trend line. That makes that even look better to me. And then when you have a quick recovery and then it holds price for a week or two, man, that has been a real sign of strength. Am I imagining that lately?
No.
I think you said, well, you showed that in your first pick, right? You know, US Steel came back up, you know, kind of got beat down, came back up, kind of trended sideways, and now you're expecting that break. I've seen that particular pattern in the markets quite a bit, actually.
Yeah, I mean, so. this like quick sell off, and they don't all recover, but when you get that quick, I mean, I've seen it a lot lately in patterns, and the fact that it's happened within this broader pattern with clear trend lines, right? Clear trend lines. You get a break of there. Yeah, I could see another leg up pretty easy there. I like that. All right, you're 2 for 3 on jokes, Greg. Make me laugh a third time.
All right. I was making Russian tea. Unfortunately, I cannot fish the tea bag out of the vodka bottle.
You made me laugh 2 out of 4 times tonight. So, Lizzie, about 50%. You got good risk reward.
I got to do what I got to do.
You know?
There you go. 2 to 1.
All right, Tyler, we got one round left. Once again, I've loved tonight, not only because the picture all solid, I got a diversity of things, you know. I got all kinds of different things to digest and think about. I mean, I got all kinds of things I can do. Not just 10 versions of the same bullish trade, right? Finishes off.
Yep. Yeah. All right. So this one, I've been stalking this one for a bit after its earnings announcement, and maybe we brought this up, Mark. I feel like you and I have talked about it at some point, but all right, Seagate Technology. Oh, you know what? You can't see this. This is actually a big green bar here. If you remember, for those of you that have tracked Seagate, this had a 2-bar run that was massive. And because because of the stupidity of Thinkorswim paper money, you can't see it. So
they missed the whole day of price action on the whole market, didn't they?
Yeah. Every one of these charts is missing 1 bar. You imagine there's a big green bar right here. This was not a gap. So if you miss that massive move, you say, well, when's my next setup? Well, I mean, let's wait for a pause or a pullback, and you've just got one. You just got one. So I really like this little pullback pattern, and looking for this to pop again. We're finding some support at the 20 MA. Dips have been buys in this thing for a long time. And so trigger for me on this would be over this trend line, which could correspond with today's high or yesterday's high if you want a little more confirmation. But the trade that I liked on this, Mark, because Seagate's been a little volatile, the option premiums are decent. This is one of the few stocks that has an IV rank above 50, being outside of earnings as well, right? Not uncommon to see an IV above 50 into earnings. To get it outside of the earnings cycle is kind of nice. So thought, all right, maybe I can go pretty far out of the money, sell a credit spread. And so I looked at selling the 85.80 bull put. You can get about 83 cents for that. So if I take a look here, going out to July, you got the 85, which is about a 19 delta. Sell that, buy the 80, 83 cents. So what? I'm risking 420. Now I want to do this in my head. 417. I'm making 83 bucks on 417. About a 20% return. 20% return, credit spread. I think this dip gets bought. That ROI is high enough, you know, to make me not disappointed if it really rips. And I wish I would have done a bull call. I think you could do a bull call if you wanted to. But anyways, I like the trend. Dips have been buys. And you know what, actually, you know, one reason why I like this credit spread, because the last time this had a pullback, it did trigger and then it got a little messy before finally moving in the right direction. If I do a credit spread, I got a little bit more room in case this decides to get a little squirrely before continuing the trend. I don't want to get shaken out like could have happened back here. So, all right, there you go. There's the trade. Bull put STX.
Like it. Don't have anything to add. Greg, one pick left.
All
Finish her
right.
off.
I hate to do this to myself and to everybody who knows me, but I'm going to go with Boeing. BA. I hate this stock. I really do.
Is this a bearish trade?
No, it's not. That's the problem.
All right. So who are you? Because I know you're not, this is not Greg Holmes.
I can't do it, man. The technicals, if you look at this thing, if you draw a trend line from that high on down and catch some tops there, this thing's reversing, right? I hate to say it, but it is. And it's ready to pop above that 50-day moving average. We've got resistance right there at like the 245 level. I don't know if you want to call this a reopening thing or whatever you want to call this, but you know me, Mark. Every time we have one of these meetings on Friday, I'm always hacking on Boeing, but I just can't do it anymore. It looks to me like it wants to spin. Now, obviously, there's no trade until it gets above 244, 245, but where it's sitting right now, it's trying to change its tune. And I think that, you know, you had some really solid resistance there, right where we're sitting right now. Obviously, we got to get above that before we're interested. But when you do, there's a pretty good trade setup there. The July, again, going with July, you know, kind of shorter term here. Bull call 245, 260. You're going to see a pretty sweet setup here. So you got 515 for 15 bucks there. right? So, you're 2-to-1 pretty easily there. You're able to play in the big boy space there for not a lot of risk, really.
So what's the total cost there?
It's 515 or 535, depending on what you pay for it. But say 520, and you're getting $15 between the strikes there. So definitely potential of 2-to-1 there. And I think where we are in this particular chart, if it breaks where it is, it's going to head back up to those highs, right? Now, I only stopped it at the 260 because I think that's a clear support or a resistance level there. But can it get there? Absolutely. I can get there in a hurry, right? So again, we have to be patient and wait for the break here. Like I said, for me, I'm entering above 245 was when I would put this trade on. But I honestly think it's changing its personality as far as I'm concerned.
Greg Holmes.
I know.
Polish.
I'm gonna hate myself in the morning, but
I was looking at Boeing.
Airline stocks are turning around.
I didn't.
saw that too.
I was looking at Boeing this morning and didn't notice the trend line. But it's there, right? It's pretty clear.
And see, the way Tyler drew it is a little different than the way I drew it. I took the body of the top of that high candle there, and then connected it, and that actually looks even better, to be honest with you. But obviously, trend lines are subjective, right? If you draw it like I drew it,
like you're saying, it broke out.
Yeah, like
already on the trend.
Well, and give me a weekly chart too. I'm going to add some fun bullishness to this little party we're having on Boeing. Let's go to a weekly chart. And I also use the 5 EMA on mine. The 5 EMA has acted as resistance for weeks and weeks. It's cleared that. It's cleared my girlfriend, the 9. So you're getting above moving averages because you don't have my girlfriend on there, Tyler.
Oh, get around.
Get
around.
There.
We go back.
And so we've had a series, you get below some moving averages, you're starting to clear that. So you're clearing multiple resistance areas. You got a little horizontal lift, some room to run. I mean, when you get multiple breaks of resistance, same thing would be true of support, right? Break multiple support levels.
Correct.
Yeah, I can see why. This is why you're a professional, Greg, right? Because you hate the company. But you can't ignore the chart.
That's right.
It's
a technical trade. That's what I don't really care what the stock does fundamentally because I'm not going to hold it and own it. But technically speaking, I see what I see, right?
It's got a good history with this type of setup too on the weekly. That's good.
Well, look at the last one, right? Like that went from 201 to almost 260-ish, right? Yeah. So if we get that even half of that move here, that'll get you your $15, right? Which is what we're looking for. So
it was very intriguing. I won't lie. Greg, tell me a joke while I'm thinking about.
All right. A guy is on a date with a girl, so he takes her to Lover's Lane. When they get up there, she says, "I have to be honest with you. I'm a hooker." The guy thinks about it for a short time and says, "It's okay." He agrees to pay her $25 and they start having sex. After they finish, the guy says, "You know what? I have to be honest with you as well. I'm a cab driver and it'll cost you $25 for me to drive you back home."
I'll give that a push. You're 50. Listen, I'm looking at these things and there's been some trade. I mean, I love that Boeing trade. I really like the TLT trade too. CSL and the X. Man, I'm having a tough time on this. I'll be honest. Usually Boeing's probably my favorite trade. I love the U.S. Steel ways to play that. I love Tlt. I like your Clorox. I'm having a hard time. I'll be honest. I'm having a hard time. I'm going to go to the first one to say the coach's name 3 times is the winner tonight. I don't do this very often, but I literally, this one's 6s for me. This one's 6 for me. First one to get 3 votes. First one to get 3 votes is going to be the winner tonight. And there's going to be a little bit of delay on the thing as votes come in. These were some good, and they were diverse picks tonight. I
had a Disney bear trade on there, but I didn't want to offend Tyler's.
Oh, you know what? You know what, Greg? I kid you not. I had Disney on my list too.
as a bear pick.
Yes. Yes, but I'm like, I don't want to hate myself.
It's a gorgeous bear retracement, but yeah.
Yeah.
I know you're always a big fan of this company, so
I had them last week for a bull pick, with bull puts last week, but every time you've had a clean pattern like this, it just doesn't work. But yes, I see the setup. It's clean.
Listen, you both got 3 votes. Greg got the 3 votes first. Greg, you're the winner tonight. Tyler, he's got your number. That was, I mean, seriously, both got 3 votes. Just the order of it. Greg, as the new winner, and you have Trading Labs tonight in 40 minutes for pro members. You get the last word.
I'd like to thank Tyler for coming out again. We always have fun when we do this, and anytime, Ty, anytime.
Well done, well done, well done.
Tyler, I had you on the scorecard till Boeing, but boy, Boeing just brought it to even for me. I had to throw it to the audience. That's a good. That's
it's all good. It's all good.
I'd be surprised if I don't play Boeing. That's just on the right signal. What's the signals you use on that? That's going to be our final word. What signal would you use on Boeing to get into a trade?
Yeah, so so that red candle that's there, yeah. So right about, yeah. So anything over 245 for me is where I'm getting in there. Because 245, you'll clear that old. So there's another candle there. There's that little upside down hammer candle there. If you look at the back a little bit, Ty, back further, green one right there. So what's the high of that thing there? 245.65. So as long as you clear that, then you kind of clear this double top thing that you're looking at there. You're well above the 50. It looks great on the weekly chart. Like I said, anything above 245, I like it. And your risk reward's still going to be solid. So.
Well, listen, I seriously, I love the little notes I take, because I literally, this is my Wednesday night routine now. 2 coaches come on, give me some picks. I go back and I evaluate what I want to do in my trading in the coming days. And I love the research, and I love that I can watch Netflix while other people have done the research and the work for it. And I just got to map it out now according to my trading plan. Hey, love you all. If you want to be part of this community, see if it's for you. I mean, we got tons of stuff for pro members. Go sign up for a 15-day free trial. Go to the store tab at Tackle Trading. But until next week on Trade Masters, everyone have a wonderful week.